Where are we with the whole TikTok, WeChat, U.S. government, China situation? Apparently, TikTok will be suing the Trump administration as soon as Tuesday over the executive order barring its service. TikTok basically has no choice. In several pieces over the weekend, I heard several details that were similar to this, quoting NPR. The president's executive order stands to cut off American advertisers on its app and force Apple and Google to remove it from mobile app stores. TikTok's more than 1,000 U.S.-based employees could have their paychecks indefinitely frozen. It could force landlords housing TikTok operations to evict them. And Trump's order could make it impossible for American lawyers to represent TikTok in any U.S. legal proceedings. The source familiar with TikTok's internal discussions on the matter said the president's order appeared rushed and did not include carve-outs or exceptions for TikTok to maintain any legal representation, which the company plans to argue is a violation of its due process rights, end quote. In other words, the way the law is written, TikTok can't even hire lawyers because literally, as the order is written, no one could do business with them or take money from them or transact with them in any way. Cities couldn't even fine TikTok vehicles if they parked illegally. So that is sort of a glaring error in drafting that one would think would call for immediate legal redress. Also over the weekend, sources told the Wall Street Journal that Twitter has held preliminary talks with TikTok about combining with TikTok's U.S. operations, expecting that it would face less antitrust scrutiny than another suitor. And yes, one could see some serious product synergies between TikTok and Twitter. That would be ironic, though, because the only reason TikTok is in the lane it's in is because Twitter killed Vine all those years ago. But at the same time, a big question would be, could Twitter afford it? Quote, "It isn't clear what the valuation of TikTok's U.S. operations would be, but estimates run into the tens of billions of dollars, which raises questions about how Twitter would finance any deal. Twitter's market capitalization is about $29 billion, and Microsoft's is more than $1.6 trillion. Because it is much smaller, Twitter has reason that it would be unlikely to face the same level of antitrust scrutiny as Microsoft or other potential bidders, said people familiar with the discussions. But Twitter would almost certainly need help from other investors if it does buy TikTok. The company has far less financial firepower than other major tech players, though it does have high-powered investors such as private equity firm Silver Lake. Twitter started making a consistent profit in the past couple of years, but reported a $1.23 billion loss in the latest quarter. Twitter reported $7.8 billion in cash and short-term investments as of June, compared with more than $136 billion for Microsoft, end quote. And on to the WeChat angle. People continue to whisper that Apple's business is the most endangered by this geopolitical tech war, and it might be endangered almost immediately. Put simply, none of the big tech companies are as exposed to China as Apple is, but they're exposed for basically everything from manufacturing to sales contributing to their bottom line, because China's such a big market for them. So the nuclear problem for Apple is, of course, if China retaliates and Apple can't manufacture their stuff in mainland China, but that would only come after rounds of retaliation. Apple faces a more immediate problem with the whole WeChat banning, which could be mere weeks away. WeChat will be an Apple problem if the U.S. government doesn't change its stance soon, quoting Chaim Gartenberg in The Verge. An iPhone without WeChat is effectively not a phone at all for the hundreds of millions of Chinese users that rely on the service, customers on which Apple's entire iPhone business model relies. If Apple can't offer WeChat on the iPhone due to Trump's ban, then much of its Chinese business will almost certainly evaporate overnight. Respected analyst Ming-Chi Kuo says Apple's annual iPhone shipments in China could be reduced by 25 to 30% if it's required to remove WeChat from its app stores around the world. Sales of other related Apple hardware like Apple Watches, iPads, AirPods, and Macs could be reduced by 15 to 25%. Apple is caught in a trap of its own making here thanks to its lockdown platform. A more open system, similar to Google's Android, would let users install WeChat without Apple's explicit approval. It wouldn't be ideal for Apple, but at least millions of Chinese customers could still use their iPhones. Meanwhile, Apple physically can't outsource its manufacturing anywhere else in the world, and certainly not in the U.S. Then COO Tim Cook led a 2005 shift to just-in-time manufacturing that cuts down on excess inventory and constantly pumps out new products. The result is that Apple today is almost exclusively reliant on Chinese manufacturers like Foxconn. While recent developments in India have attempted to lessen Apple's need to exclusively build all of its hardware in China, it's a drop in the bucket compared to what Apple builds in and therefore would have to export from China, end quote.